Hey guys, David here. Welcome to Digital Outlook. In today's video, we're going to take a look at the macro environment, and I'm going to show you something that I think is going to play out very soon that's going to leave most people with their mouths hanging open. But before we do, if you'd hit that like and subscribe, tell your friends and family so we can get this information out to as many people as possible, that would be fantastic. So guys, without further ado, why don't we get to it? Okay guys, like I mentioned in the intro, in this video we're going to take a look at the macroeconomic environment, and we're going to examine three separate indices. We're going to take a look at the DXY, the dollar index, we're going to take a look at the Dow Jones Industrial Average, and we're going to take a look at the total crypto market cap. Now guys, at the end of this video, I'm going to present to you a scenario that I see has a great potential of playing out that is not on very many people's radar, that if this scenario does play out like I think it will, it is going to leave people with their mouths hanging open and in the dust. So you're going to want to stick around to the end to hear that. So now guys, before we get into looking at the various indices, I want to talk a little bit about our economic engine. So as most of you know, we are a debt-driven economy. So basically, in a nutshell, large portions of borrowing and lending happen all the time that actually help the economic engine move. So for instance, we got the mortgage markets. We've got, the automobile market, the vehicle lending market. You have major corporations that actually go out and get industrial loans in order to make acquisitions and investments and all of that. Well, guys, right now we are facing a major liquidity crisis. Now, the reason we're facing a liquidity crisis is that interest rates have been progressively going up and up. Now, guys, it seems like small amounts, less than 0.5% or this and that. But believe it or not, in a lot of people's cases, 0.5% can price people out of their mortgage. And 0.5%, when you're dealing with the billions and billions of dollars in corporate acquisitions, it could make that cost of borrowing so prohibitive that the corporation is not going to go through with it. Now, guys, this has a huge impact on our economic engine, because when people can't get liquidity through the borrowing mechanisms that are normally available and the credit mechanisms that are normally available, then they look at other ways in order to have some cash on hand. That can be in the liquidation of assets, whether they be capital markets or actual real properties, all of that kind of stuff. Now, why is the interest rate climbing the way it is? Well, as we know, the Federal Reserve has instituted this quantitative tightening where they're trying to combat runaway inflation, which is almost laughable when you consider that it was the Federal Reserve's quantitative easing policies over the last couple of years, printing trillions of dollars, that resulted in this runaway inflation. And it is another form, in my view, of manipulation in the marketplace. Now, guys, as many of you know, our dollar has a direct impact on equity markets and on the crypto markets. So as the dollar climbs, cryptos and equities usually fall. So let's just take a look now at the DXY, and I'm going to show you something quite interesting. So guys, here's the DXY right now, and you can see that we're right up here at $1.08 right now. In fact, we even tagged way up here at $9.34, and we've dropped down a little bit. But guys, if you're looking at this, and this was one of your cryptos in one of your portfolios, or if it was like one of mine, what would we be saying right now? Well, we'd be probably saying, pull the ripcord, get out, take your profits, because why? Look at this parabolic move. It is absolutely insane. And guys, just to show you how crazy the dollar is in this runaway top, if you're not used to looking at the DXY, take a look at this. Let's just drop in the RSI on here, and I'm going to show you something quite interesting. All right. So here we've got the RSI on the DXY on a weekly time frame. Let's just drop this down and let's just take a look at this on a monthly time frame so you can see just how crazy this really is. So guys, look at where we are on the RSI. I'll move this over just a little bit here, but look at this, guys. Here we have the RSI. We are in way oversold territory on the dollar. And look at the last time we were in here was 2014, and the time before that, guys, way back in 2001 and 2. Guys, this is absolutely crazy right now. And my question to you is this: do you think that this is just going to keep on going straight up in a straight line? Guys, I'm telling you, this is just going to go up, and we're going to see a break here. And I'm thinking sooner than most people think, and we are going to see a waterfall moment where this drops down rock hard, super fast. And there's that saying, bulls go up the stairs and bears come out the window. And when that happens, guys, you are going to see the equity market and you're going to see the crypto markets absolutely take off like they never have before. And guys, in my view, this could be one of the final massive blow off tops before we face one of the biggest crashes that any of these markets have ever faced in the history of world finance. Now, let me show you why. So guys, I'm going to take us over here to the Dow Jones Industrial Average. Now, guys, this is on a macro scale. So right back here, you can see this is the 2008 and 9 crisis right in here. And this is where we are in present day. Now, guys, I want to show you something from a Fibonacci point of view. So, guys, let's just drop in a fib right in here. Yep, right in here. Pull it over here and draw it all the way across to where we are right now. Whoop, up, 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 up. Oh, right. Goodness sakes. Balance. I would not have made a good surgeon, need a steady hand, right? Guys, what I want to show you is this. Way up at this top line is the 4.236 Fibonacci extension. And you can see from the 2008 and 9 crisis all the way up until we hit COVID here. And then we had that major blip in the big dump right in there. And then boom, all the way back up here. Well, guys, the Dow did not do a full extension to this this 4.236 extension. And I believe what's about to happen is you are going to see the DXY start to peter out and start to roll here. And then what you're going to see is you're going to see the Dow start to take off again on a meteoric rise. And this time, guys, it is going to hit that 4.236, maybe even pierce it. But when it rolls over, guys, we are in for probably one of the greatest crashes that there has ever been. But we are right at this moment on the precipice, in my view, of a major reversal and turnaround as the dollar stops this parabolic rise and it actually is almost getting to the point where it's vertical, and when it rolls over, you are going to see this massive move in the Dow Jones Industrial Average, where it's going to hit way up here at the 4.236. And at that point, at the same time, let's just take a look over here at the crypto markets. Now, this is the total crypto cap on the weekly time frame. And guys, what I want to show you in here is look at where the RSI is on this market right here. We have literally been making a parabolic drop all the way down. And guys, I do not believe that we are going to drop below this $770 billion wick that we hit right back in here, which, by the way, guys, if we just dropped in a line for support and resistance, you're going to see something that I think is going to be pretty telltale as well. Just take a look at where we tagged out here, right here, way back here when we were dealing in that 2018 top right in here. Look at where we came back right from that point right to here. Guys, I think that we have already touched our bottom, and this DXY is eventually going to start to roll over in the next month or two, and you're going to see the Dow Jones Industrial Average pop up way back up in here, and you're going to see the crypto market move way back up. We are so oversold. It is insane. And over here, we are so overbought. It's insane. This has only happened twice in literally the last 20 plus years. Guys, this is not going to last in my view, and we are going to see a move like that. Now, why do I say that? Well, guys, look at this title here. It's talking about the cost of taming inflation, that those higher interest rates and how it's going to be so exorbitant and how much it's costing us. In fact, we've got these liquidity threats already coming out and looming over the markets. And you can see that it's becoming tougher to trade securities and on and on and on. Well, guys, listen to this subtitle. The Fed has encountered little pushback to its tightening campaign, but that will likely soon change as physical impact of higher rates become clearer. Guys, the higher the rates, the lower the liquidity. Do you actually believe that going into an election term in November of 2022, that they are going to allow the market to completely implode and all these equities just drop to next to nothing because they're trying just to keep inflation in check? They're not going to be able to do it, guys. It's not going to they just are not going to have the feasibility to do it. And on top of that, guys, they're deceiving us, telling us that they're doing this in the way in which they are, because in fact, they themselves, the Fed themselves, is actually buying back the debt and the very next day selling it back to those that they bought it from at even a higher rate in order to hide the fact that they are injecting liquidity into the system. And I'm going to show you something else that's really peculiar. Take a look at this in this environment. This is a Goldman Sachs projection. It says get ready for 900 billion of stock purchases this year. That was put out on March 28th of 2022. Almost $1 trillion in stock purchases this year. Where's that liquidity going to come from, guys? Think about it. There's no way that they can keep this going the way they are without completely imploding the entire markets. And I'm telling you, it's not going to happen. They are not going to do it. Something else I want you to see. Take a look at this. Wall Street giants want to be your landlord. Data shows that mega banks are buying up all U.S. real estate. Guys, they are pushing the little guy, you and me, out of the marketplace, scaring the dickens out of us to not invest in stocks and bonds and all those things right now, to not invest in crypto. But at the same time, they're turning us down on the renewals of our mortgages. They're putting high and exorbitant interest rates on credit cards, and they're literally putting the squeeze on us while they are actually gobbling up all this real estate. And guys, this all plays back into that agenda of the Great Reset, and it's absolutely sickening. Wall Street bankers are buying up all the single family homes in the U.S. A new breed of buyers pay 20% of the asking. And if you read through this article, it's absolutely crazy when you think about it. In fact, listen to this paragraph. Some have been speculating that the real estate bubble in 2020 and into 2021 is the start of the global elites Great Reset agenda. While many think the Great Reset is merely conspiracy theory, the U.S. property market indicates the likeliness of a possible future where you'll own nothing and be happy. It is absolutely insane. Now, guys, take a look at this. These 13 banks are the ones who have invested the most in crypto and blockchain to date. Just take a look at some of these names. Standard Chartered, $380 million. BNY Mellon, $321 million. Citibank, $279 million. UBS, $266 million. BNB Paribas, $236 million. Oh, here's our great friends. Morgan Stanley, $234 million. JP Morgan Chase, $206 million. Goldman Sachs, $204 million. MUFG, $185 million. ING, $170 million. BBVA, $167 million. Nomura, $146 million, and Barclays $12 million. Guys, we are being played. In my view, what is not on the radar for most folks is a reversal in this DXY that is going to cause equities to just skyrocket, and at the same time you're going to see cryptos blowing off like crazy. You got your major banks buying up all kinds of crypto at rock bottom low prices. Guys, they're not doing that because they think it's going to drop lower and sell it lower. They're doing that because they plan on offloading it to you and I in the next bull market. You've got these major banks buying up all real estate, single family homes, guys. Think about that. Taking over the mortgage industry by storm. We are being sold a bill of goods as far as I'm concerned, and it's not on most people's radar because most people believe the narrative. Most people believe that this is a situation where they need to be terribly afraid and not take any risk and not expose themselves to these markets, while all these big boys, all these banks, all these guys, and remember guys, the Federal Reserve are member banks, JP Morgan Chase, Goldman Sachs, Wells Fargo, and the like. These are the guys that are driving this debt-driven economy, that have really caused this whole situation with respect to the runaway inflation with their quantitative easing, that are now bringing into this quantitative tightening. And guys, I'm saying to you, in my view, this is a manipulative action on their part. It is done with strategic precision. And I am expecting, guys, I don't follow their advice, I follow their behavior, and I am expecting, guys, that we are going to see a major turnaround very, very soon. And where on earth do you think that 900 billion that Goldman Sachs is talking about is going to come from? And where's that liquidity going to come from? That in the latter half of 2022 and into 2023, major amounts, over $1 trillion of stocks are going to be bought. Well, guys, I'm telling you, it's because they are going to reverse the narrative. They are not going to allow this to continue the way it's going, and you're going to see massive infusions into these stock markets, into these cryptos like you have never seen before, and it is going to be the biggest bull run in history, in my opinion. And once that happens, guys, then they're going to let it crash, and they are going to get their great reset. So guys, this is the video I have for you. I really hope you enjoyed it. And guys, if you disagree, no worry. Put that down in the comments. Let's have a discussion. All right. So guys, as you know, I'm not a financial advisor, and this isn't financial advice, but if you found value in it, if you'd hit that like and subscribe, I'd really appreciate it. So, in the meantime, and in between times, stay safe, be blessed, and I'll catch you in the next one.